Ladies and gentlemen, good day and welcome to the Vardhman Textiles Limited Q1 FY23 earnings conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Nigam from Batlivala and Karani Securities India Private Limited. Thank you, and over to you, sir.
Hi everyone, good afternoon. Welcome to the Vardhman Textiles Q1 FY23 earnings conference call. And from the management team, we are joined today by Mr. Neeraj Jain, who is the Joint Managing Director, Mr. Sushil Jam, Director Raw Materials, Mr. Rajiv Thapar, CFO, Mr. Mukesh Bansal, Senior Vice President, Fabric Marketing, and Mr. Varun Malhotra, Head of Finance. And without any further delay, I'll hand it over to management for opening remarks.
Good afternoon, everyone. Thank you for joining the call. We have already declared the results, which I'm sure all of you would have gone through by this time. So, first quarter has still been reasonably okay because of a couple of reasons. One, I think every factory had some cotton available to them, which was procured where the prices have not gone to the peak. Also, there were pending contracts, I think, with everyone, which were getting executed in this period. So, as a result of that, and they were generally on a higher prices basis. So, as a result of that, I think the margins were also better. Three, the situation kept on becoming challenging, and I think May, June, July, things were becoming more difficult or more challenging as the time passed. So the first quarter number still looks reasonably okay, and the situation after that is that the prices internationally, cotton prices started coming down, and we saw an inverse of almost 25-30 cents between July and December New York future. By the time July was over, December we started looking at the inverse. Also, the prices started coming down. Not only in cotton, but I think lots of other commodities because the overall inflation issues, concerns, and the rate of interest which started increasing practically everywhere. We saw a peak of 155, 156 US cents in the month of June and July, and after that, as on today, the prices are close to 90-92 cents New York future. Of course, the physical cotton is still relatively expensive compared to this because the bases have increased in this period. So that was one where since the product prices started coming down, everyone started looking at, all brands, all customers started looking at the prices of cotton yarn, and all the products to go down. And then they came to the wait and watch policy rather than placing the orders because the concern was by the time the product reaches them, there would be a huge loss in the overall inventory in the system. So that's how we look at this time. Specifically to the Indian situation, the prices came down in India also. We saw a high of almost 105,000 and 106,000 rupees a candy. And from there, we came down to, as on today, almost 83,000 rupees a candy. So it's a drop of almost 25-30%, whereas the drop internationally is higher. So over there, we saw from 155 cents going down to about 90 US cents. The Indian cotton with 83,000 rupees today is one of the costliest in the entire world, and in terms of US cents, coming close to about 137, 138 US cents, whereas the international cotton available today, the cost look for the cotton available internationally will be in the range of maybe about, maximum will be in the range of about 120 cents or so. So practically we are 18 to 20 US cents higher than the international prices. There are 4 countries which covers almost 70-80% of the spinning capacity of the world: India, Pakistan, China, and Vietnam. And look at the prices in all these 4 countries. The prices of raw cotton in China will be close to about, it's less than $1, 92 cents as of now. The Pakistani rupee is devalued and the prices are also reasonable. And if you look at the US cents prices in the range of about 92 cents as of now. The Vietnam is the third biggest, and the Australian cotton available to them today with a 90 cents New York future will be in the range of about maybe 118 to 120 US cents. Whereas India, because of the shortage and import we couldn't do in this period, we are still at about 138 cents. And these four countries cover practically 80% of the spinning for the entire world. So as a result, India has a huge disadvantage which continues, carries on. So we are not in a position to competitive on the export market. The Indian spinner also started looking at rather whosoever has the cotton or whatever cotton is available, they were using that. And since our prices of raw material were much higher, the mills took a strategy where they started looking at stopping the spindles rather than buying the cotton at these prices and then taking a hit. Whereas the international price of cotton came down, the yarn price got readjusted very fast based upon that, whereas the Indian cost was higher. So it was making more sense for the Indian spinners to stop the spindles or to reduce the capacity rather than buying cotton at these prices. As a result of that, though the theoretical prices are almost 82,000 rupees as of now per candy in India, but there's hardly any deal happening. There's neither a buyer nor a seller at these prices, and it's more of a theoretical price because of the shortage. It's not coming down, but I think eventually there doesn't seem to be any major interest from the spinners to buy at these prices. The second impact of this was also based upon the future prices of cotton in India. The November, December deliveries are available in India at a price of almost 65,000 rupees a candy, which is 18,000 rupees lower than the today's price, which is one clear signal that the prices of cotton are likely to come down sharply in India. So as a result of that, the spinners' interest was not to buy, and also the end customer also started looking at, since the prices are coming down, so why should I take any position today? So everyone was just postponing the purchase. The third factor was the inflation outside India, which was a big concern. Both the prices of food grains as well as gas, they increased in a big way. As a result of that, I think everyone was concerned about, especially the middle segment or the lower middle segment got concerned, and they were trying to have their budget more for the food grains as well as gas rather than looking at the textile. So the overall demand of textile also came down in a big way. In this period, it is estimated that the Indian spinners almost 30-35% spinning capacity stopped, and in spite of that, there is hardly any demand for the yarn or other products also. Home textile continues to operate at about 50% capacity. Denim continues to operate at about 50% capacity. The only better segment as of now is the woven fabric compared to all these products. Of course, there is a hit there also, but woven is still better because as the people are
So maybe the demand will pick up as soon as the some correction in the demand and some correction in the prices happen. That's it from my side, sir.
All right, we can start with the Q&A now. I think the remaining queries could be, we can clarify as the question comes in.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mr. Sahil Kumar Sharma. Please go ahead, sir. Mr. Sharma, your line is in talk mode, sir. Please go ahead with your question.
Anil Kumar Sharma, madam. Good afternoon, sir. My question is on forward contract booking. We have booked in US, and last quarter we have provided for 61 crore. This quarter also we have provided for 41 crores, I think. And whether we will require to provide for this next quarter also, or that can be reversed also?
No. So we have already we have cleared all the contracts. So the next quarter there's not likely to be any negative loss to that extent, or maybe we have still some puts available to us. I'm not very sure whether they'll become the positive or the negative. But as far as the negativity is concerned, as of now, I don't think there's any likely to be any negative in the next quarter. But if the cotton goes down or those puts become in money, that could be a positive.
Well, it can be positive, I think, because prices are going down.
Yeah, so let's see how it goes.
All right. And my second question is at what capacity we are running presently, sir, in the yard as well as?
So on the spinning side, as I mentioned, we have stocked about 8-9% of our capacity, whereas on the fabric side, we are running more than about 80% of our capacity as of now. So 80-85% capacity is still under existing. So overall capacity utilization is not that bad for us.
Right. Thank you, sir.
The next question is from the line of Mr. Umesh from Kotak Life. Please go ahead, sir.
Hi, sir. Good afternoon. Thanks for the opportunity. Sir, I have two questions. One more from my perspective, zinc and cotton. And which
Sorry, we can't hear you.
Hello.
Mr. Umesh?
Can you hear me now?
Yes, sir. Your voice is audible. Please go ahead with the question.
Yeah, so I have two questions. One from an industry perspective. Post the ban of zinc and cotton, I think that has also become an act from this month itself. From last 1.5 years since the ban is effective, are we seeing some sort of more demand from countries like Bangladesh who were earlier procuring yarn from China?
So definitely the demand from China, from Bangladesh has been good in the previous quarters. But yes, as on today, I think all parts of the world, everyone is in a wait and watch situation and using their own inventories. So the overall demand is less even from Bangladesh also for the last almost 1.5-2 months.
Right.
That's the time with world markets.
Sure. So from a structural perspective, do you think this Xinjiang ban could actually shift the Bangladesh garment manufacturer to start procuring yarn from India also? I understand Bangladesh is one of the major export partners for Indian yarn manufacturing companies, but that can accelerate from here on.
If you look at last 2 years, the demand from Bangladesh has been quite good. They are expanding in a big way on the garmenting side. At the same time, they are not expanding that big on the spinning side. So if they continue to do well by taking a share from China, I'm sure the overall demand for yarn from Bangladesh for Indian yarn will also be good.
Right. Understood. And sir, one follow-up question on this. Is there a possibility that rather than these garment manufacturer players started to buying yarn from India, there could be a possibility that Indian cotton players can start exporting raw cotton to China, and then Chinese player can start converting cotton to yarn and then supplying it to Bangladesh. Does that commercially makes viable?
Not really, because of two factors. One, the China has an import policy where it could be imported only through the quota available to them, and they normally government allows the quota from time to time, and that's the maximum cotton they can buy, and this has been their policy for last almost 10-15 years. Two, the overall cost of manufacturing is increasing in China also. So they're trying to look at more concentrating on the value addition side, which is the garmenting or maybe fabric. So on the spinning side, they are losing the interest for last 10 years. Just to give you a perspective, the China's peak capacity about 10 years back was 112 million spindles, which as of now has come down to 94 million spindles. So I think the overall cost structure also is not allowing them, or they are not interested to look at the low margin industry. So that's why it looks like they may not be really very, very interested for the spinning business actually.
Sure, sir. That's helpful. Second question was more of a follow-up from the previous questionnaire. Can you explain me the reason of the hedging losses that we are reporting? What is the exact nature of this transaction?
So when we were buying cotton, Indian cotton, there was no way we could hedge it because our thought process was the cotton is at a very high price. Though, of course, the price kept on increasing, which was not envisaged at that stage. So when the season started or the prices were going up, we had no choice than to buy Indian cotton because of our consumptions. But the MCX or there is no mechanism by which you can hedge the Indian cotton in India. The only possibility is that you can hedge it on a New York future. So what we were doing, we were buying physical cotton and we started selling on the New York future to hedge it, so that if the prices goes down, at least to that extent, we'll have a loss on the physical cotton and we'll have a gain on the New York future. At the same time, if the prices goes up, then we will have a loss on the New York future, but at the same time, we'll have a gain on the physical cotton we had. And the same thing has happened. So on one hand, we had a loss on of New York future hedges. But at the same time, to that extent, we have a gain on the physical side also, which the physical side gain will come under our operations or the raw material cost only. So that's how this hedging loss is being seen separate.
at the current price. Okay. And sir, capex also, as you mentioned and explained earlier in the opening remarks, we have deferred the capex, and we'll take a call in around 2 months. So, sir, what is the level of, what is the benchmark that we are looking at in terms of, say, cost per spindle or, anything else in terms of demand or supply scenario that, what would tempt us to, what would...
It's nothing to do with that the capex prices will come down. Only 2-3 months I'm looking at if our raw material prices are aligned to the international prices, which means India will also be competitive once again. So that's where we want to look at. It's not that the prices of machine will come down, that's why we are delaying it. No, it's not like that. It's a basic profitability should be restored or the margin should be normalized, then only we'll take up these projects.
Okay. Why I was asking is since, once we order the machinery, there's a lot of lead time, right? So I'm assuming obviously things will normalize in the next quarter or two. So what stops us from at least, ordering them or, obviously the current prices you said are high. So that was my, how I was looking at it. So
that's true. So maybe your point is valid that once the projects are going to be commissioned only 2 years down the line.
Yes.
But still going by the situation, we thought it to be prudent because in any case 100,000 spindles will be implemented in next 2 to 3 months, which should be sufficient for us to take care of additional demand for next couple of months. So it's only 2-3 months. Once the overall mood of the industry becomes better, we'll start looking at it. So it's not that any permanent changes there in our thought process. I think we still going to go on the overall expansion plans we have. So it's a matter of once the normalization happens, because it's a very challenging time, and we are also looking at how to pass through this time by making all the alternate product changes. So it is more of a sentimental as of now rather than any major issue or a concern.
Sure. And one last question. So once, as we said, right, we have also shut down some spinning capacity because there is no, right now, in terms of demand, everyone's wait and watch mode. So once, new cotton comes in and things align with international prices and, so can it be a scenario in Q3 wherein, everyone just starts, the order booking starts and there can be a huge crush on orders in terms of backlog because a lot of the capacity is down already, as you mentioned, around 30-35%. We are down.
There is all likelihood of this scenario which you are mentioning, that since the overall capacity is down, the pipelines are empty, suddenly once the demand comes in, there could be a possibility because of pipeline, the sudden demand can again give a big push to the overall system. But I think we have to wait and watch because the overall capacity is down. India 30-35% is the overall spinning down, and maybe another 8-10% people would have converted on the alternate products like 100% polyester, 100% viscose, etc. So what the scenario you are mentioning, I will not be saying that it is impossible. There could be a possibility once the customer or the brand starts coming in, the prices are normal or they are more comfortable on the raw material prices for a medium term. There could be this possibility that suddenly we might find a huge demand coming in.
Sure. So, sorry, I said last question, just one corollary to this. As we said, 35% production is down. And, isn't that the case if for, say, a quarter, 3-4 months, we are not able to supply to our key customers, that demand goes away and shifts to, at least some of it shifts to some other sources or even suppliers?
No.
If you can help me explain the dynamic, please.
So it's not that it is gone to some other countries. Other countries are still not losing or making some money, but the overall demand still is low because the brands are all looking at the prices to be dropped. So it's not that they are buying more from X, Y, or Z company. They have been buying less only. And in any case, India controls almost 25-30% of the world's exports market of yarn. It's not possible for any other country to immediately, capture that demand.
Okay, so this is basically, if I understand, it is because the commodity now is all cooling off, so everyone is in a wait and watch mode. That's why we are seeing what we are seeing, right?
Yeah, that's one. India specifically, the cotton specifically, the Indian market is more bad because our prices are much higher than the international prices.
Right. Yeah, so indirectly a commodity plays, right?
Yeah.
What's happening. So our customers are right now secure that way because if we have shut down some capacity, that should not be a problem. At least the customers per se. For the demand is okay, that can come back, but customers are intact right now, right?
Right. Just to give you another point, though I mentioned that I've stopped 8-10% capacity, but just to look at that, financial loss should not be there because we buy cotton at a higher price and we sell at a current national prices of cotton. But at the same time, whosoever is my regular customer or is depending upon me, we are ready to take that hit, and to that extent, we are ready to buy cotton also at these prices, so that the customer should not get suffered, because that's a long-term bet we have taken. So it's only if you don't have customer or you don't have regular customers or you don't have, there are some floating customers which are not coming to you. So to that extent, I'm willing to stop the production. But when it comes to my regular customers, I don't think there is even any iota of issue or thoughts that we don't want to supply to them. Then
that was my point. Maybe my point was if the customer is demanding and still we are not supplying, then that can be issue. But as you mentioned, that is not we can take the hit, right?
Yes, we are very clear for the customer. There's no second thought even. I mean, there's not. We are very clear that customer wants something, irrespective of the cost or price. We will not leave them.
Sure. Thanks a lot. Thank you, sir. Yeah.
Thank you, Mr. Sharma. We take the next question from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you. Just wanted to understand what is the current yarn price in the international market?
In the range of about $4.10 to $4.30. Anyone's guess.
And the spread would be around at these levels?
Spread for India will be negative.
Okay.
And spread for Pakistan, Vietnam, China would be in the range of about 90 cents or so.
Okay. So, though China plus one is a very attractive opportunity for India, do you think that China?
Sorry, Prerna, when I said the negative means the margin would be negative, not the spread would be negative.
Okay, understood, sir. I got that.
Yeah.
Sir, I just wanted to understand, that because of Xinjiang cotton ban, the demand for that cotton has reduced considerably. Do you think that China will become a cheaper source of cotton for a longer period of time going forward? Any thoughts on that?
Let's look at the total Chinese balance sheet of cotton. They consume close to about 8 million tons. And out of that, they import almost 1.5-2 million tons. 6 million tons is there, or 5.5 million tons is there, domestic production. Out of that, 80% comes from Xinjiang. So I think the likely scenario going forward would be that whosoever or wherever they are exporting the products, they'll have to import cotton or import yarn, or use the non-Xinjiang cotton which is available within China. The Xinjiang cotton will be available or will be used either for the Chinese local demand or for the other countries like Asia, Middle East, where they don't have these kind of restrictions, so they'll have to readjust. But in any case, they will be net short on the cotton or cotton yarn if they take aside the Xinjiang cotton for their exports only.
Okay. Because global consumption pattern 35% is US, maybe 30-35% will be So
I am already holding to the cotton. If that's expensive and the new cotton comes at a cheaper price, so that's one loss which is likely to happen. Two, whatever finished goods are there, because the inventory is valued at current cost of cotton plus the conversion cost. So today, suppose theoretically for any mill, if the cotton price is at 82,000 rupees, which is the current price, and tomorrow, whenever September, October, depending when you start buying the new cotton at a lower prices. So whatever inventories you have, normal inventories in the system, finished goods I'm talking, they'll also get readjusted based upon the new cotton prices as well as the conversion costs. So there's some mark to market or some valuation hit which has to happen by the time we go into the era of a lower cotton prices. Now, whether that happens in September or October, I'm not sure. That's also likely to happen across chain for everyone. But yes, Q4 onward, so Q3 onwards, on the margin side, we may be normalized. But depending upon when do we start buying any textile mill, there would be some valuation hit. Q4 should be absolute normal, going back to today's situation.
Right.
I hope I could make. I hope I could explain the issue.
No, in the last call you had mentioned that this year you are holding less cotton than usual, and that's why I think the stress is that even though the cotton may not be there, but on the finished goods you may still have to take the inventory hit if the prices are lower.
Correct.
Sir, lastly, from a longer term perspective, India has already signed the agreement with Australia and UAE, and now we're looking at signing with UK, hopefully by Diwali, and then the one with the EU is also underway. So from a 2-3 year perspective, what kind of growth are you looking at both on the yarn and the fabric side?
There are four factors which are quite positive for the industry. One is, which I've already mentioned, the China Plus factor, which includes both the customers' concerns about the Xinjiang as well as their concerns about having the second source of supply. That for sure is on track and looks good. The second factor, all these FTAs which are being signed, India will get some advantage compared to the others by way of duty-free export accessible to us for those countries, which will also increase our share, and to that extent it will be positive for the industry. Third, the government is working big way on the integrated textile parks for the garmenting. If we can make this as a success as a country, because it's not only the spinning which can be or the yarn which can be exported, but these countries, especially the Australia, UAE, they'll not look at the yarn imports, they'll look at the final final consumer product imports. So if we can create those capacities successfully, and to that extent, I think the advantage will be much bigger, because then to that extent the demand will be higher in India, and we will be in a position to take market share. These are all very high cost countries, and they'll not be importing yarn for sure. So they'll be importing the final products, and we have to have those capacities available to us. So the government is working on that idea of creating all these mega parks where we are in a position to make it a success. I'm sure it's a quite big positive. Fourth is, as you know, all of us are aware that our fiber composition is just the reverse of what the world markets are. So the entire world market is 70% synthetic, 30% cotton, and we are 30% synthetic, 70% cotton. So the PLI scheme, it looks like there's lots of interest shown by the various companies, and if we are in a position to make it successful, and our consumptions in terms of the in terms of synthetic fiber keeps improving, I'm sure we will become slowly more competitive on the synthetic exports also, whether it's yarn or it's the further products. That's another positive where the government has given a big push now up to the companies wherever or whosoever wants to take advantage of that. And these are a couple of good factors also, where the opportunity seems to be quite good for Indian textile industry.
Okay. Thank you, sir. Thanks for the detailed answer.
Thank you. We take the next question from the line of Mr. Avineet Anand from Emkay Global. Please go ahead, sir.
Hello, can you hear me?
Yes, sir, you're audible.
From exports perspective, can you detail region-wise where do we export, in terms of the importance?
We export to practically entire world. So the Bangladesh, China, Vietnam, practically these are the countries where lots of export of yarn happens from India. But I think wherever there is a garmenting happening, India is exporting practically to every country. Of course, Bangladesh in has become the biggest.
Okay, so fair to assume that from our Vardhman's perspective, Bangladesh could be a double-digit number?
Yeah, for sure.
Okay, and followed by, as you said, Vietnam and China, right?
Correct.
So in terms of the spindle capacity, you highlighted, in terms of China from around 110 million in the last 10 years, they have come to around 1995. So now India probably is at a pole position in that term, right?
Yeah, so Indian spinning spindleage capacity today will be in the range of about 50 million. And if we look at the new supply in India, I think overall we will be adding close to about 2.5 to 3 million spindles, 3 million spindles per year. Out of that, 500,000 spindles could be for modernization and another about 2.5 million spindles for the expansion. So next 3 years we could add close to about 6-7 million capacity, which would be new, and another about 1.5 million modernization, if things goes well.
Okay. Now I know presently we are in more challenging times, and this question might be. But if I have to look from Vardhman's perspective, your capacity in terms of spindle, if you say 3 to 5 years perspective, and everything normalizes by 4Q of this year, where do you see that? I'm assuming that demand is back and cotton is back to its normalized numbers.
So our announced numbers are already about 2.5 lakh spindles we have announced over and above this 100,000 spindles which are under implementation. So that's a part of our announced policy which is declared. And I think to that extent we'll be reaching close to about 1.5 million spindles in next 3 years, 4 years time.
Okay, and if I have to just add on this, what could be for a spinner like us, along with some fabric that we make, what could be a long-term margin, assuming a normalized scenario?
So we have always taken this view that the margins for the company would be in the range of about 18 to 22%. A good year could be 22% or towards the higher band, and the bad year could be towards the lower band. Of course, last year was an exception towards the positiveness. This year could be an exception towards the negative side.
Okay. And lastly, from me, sir, you saw that on 3Q there will be a revaluation, right? Because of whatever, whether you have cotton or the finished goods, largely on the finished goods.
So I don't know, quarter 2 or quarter 3, depending upon when we start buying the new cotton.
Yeah. So that, where does it, in terms of accounting, that comes under our RM, right? If there is a revaluation hit, or you say it directly comes under.
There's no revaluation hit kind of item. It's only whatever is the valuation of closing stocks or the finished goods that gets reduced.
So does it
indication of that, my dear. Sir, started the quarter. The things are changing very fast, and it will not be prudent for me to give you any idea on what's going to happen, because I'm still not sure. Today the cotton is at 80,000. 1 month back it was 100,000. I don't know what will it be next 20 days.
But it would be considerably lower than Q1, right?
It could be, yes.
Okay. And sir, one more thing. You said that there would be a revaluation in Q3, but your inventory turnover ratio, which is disclosed in the financial year, is financial statement is 84 days. So that, like, if I assume broadly, it's a 3 months inventory, like raw material or finished goods. So it should finish by October, right?
No. The finished goods will never be finished.
Okay.
We will be producing and will keep on supplying. So there will be a minimum inventory. Normally our inventory of finished goods is about 20-25 days at any stage. There will always be a part of system, my dear.
Okay. And sir, our top line, does it include duty drawback benefits, this 2,800 crores?
Yeah.
What would be the quantum of that?
The duty drawback is about 1.9% on the sale price, and in addition to that there's a RODP, which is close to about 3.4%, but there's a cap of about 10.5 rupees a kg on the 100% cotton yarns. So that's only for the exports, and the domestic you don't get that.
Okay, and sir, in terms of like for yarn and fabric, what would be the share of our top 5 customers? So
we are pretty well organized to that extent. So I think the top 5 won't be more than, as far as spinning is concerned, that won't be more than 18 to 20% of our overall volume, maybe less than that. Mukesh, what will be top 5 customers in terms of the fabric constituency?
Yes, sir. Top 5 customers in terms of end brands. Our customers are Gap, Target.
No. What will be your percentage of the total fabric capacity?
Of top 5 customers, huh?
Yeah. I think maybe 10-15% only.
Okay. Okay. And sir, at maybe at broader level, when I'm selling a yarn, let's say at $100, and if I'm converting that into gray fabric and processed fabric, how much additional realization am I getting? Like to the index of 100.
Okay, ji, answer do. Mukesh?
Actually, on the gray fabric, in any case, we are not that big into the market.
Okay.
On the finished fabric, on an index of 100, it is closely little more than 2 times.
More than 2 times. So it will be 100% more, you are saying.
So if yarn is sold 100 rupees, the gray fabric, there will be a further value addition of, let's say, about 50 rupees, which becomes 150. For the process, it will be another 50, which becomes a 200 rupees of the total value addition will be almost double.
Okay, and for sir, one last question. For 1 meter fabric, how much yarn will be used? In kg terms?
3 meters per kg of fabric, per kg of yarn.
3 meter fabric for 1 kg yarn. Okay, thank you. Yeah.
Thank you. We take the next question from the line of Anand Shah from ICICI Prudential Asset Management. Please go ahead, sir.
Hi, Neeraj, this cotton situation, this is maybe the first time that the Indian cotton is more expensive than the international cotton. Just wanted to get some sense of what was so exceptional in this year and whether this can repeat.
So there are 2 exceptions happened in this year. One, our crop was, the crop got damaged, so the overall crop was less in India. It happens earlier also because the natural products, sometimes the rains are not there or there's some kind of diseases comes to the crop. I think those things have happened earlier also. The exception this was that there was an import duty which was put in by the government in the budget of 2021. So industry came to know in between that the crop is short, but at the same time, because of import duty, it couldn't be imported. Two, the international prices were also increasing in the same way. So there was a concern that you buy cotton today, by the time it gets imported into India, because the shipment was taking lots of time. So 4 months down the line, it should get in India, and by the time the prices comes down, where are you going to make a use of this? So these are the three factors. One, the crop got damaged. Two, import duty restriction. Three, the long period of shipment from outside and very high freights, which was not allowing the normal transits to happen in this period. All three factors came together. So this is a big chaos because of that as of now.
So are you saying that last time around, if such crop damage would have happened, we would have imported cotton, and cotton is generally available?
Correct. Because by the time the government allowed the duty-free import in India, it was in the month of April and May. By that time, the crop was already finished outside, because the US crop cycle is same what we have in India. So it starts somewhere in October, finishes in March. The government allowed the duty-free import till 30th September in the month of May. But that time there was no crop available outside, so we couldn't import anything. Then they extended it to October. Till October also there is no crop other than the Australian available. And the Australian, the shipping was not available because of the COVID restrictions. So the cotton could not be imported. One was the cost factor, the custom duty. Two, there was no shipment available in this period outside India.
Okay, my last question was, there was always the inventory in the play, right? I mean, last time also we would have inventory with CCI and all that. Was that also a factor which was not present this time around?
There is no inventory available, because in the initial period we exported lots of cotton when our Indian cotton prices were less. And there is hardly any quantum available with the ginners, with the traders, or even with the CCI. So as I mentioned, since the overall crop is only about 295 lakh bales or so in India, there is a huge acute shortage which got created in this period.
Okay, my last question, is there an expectation in terms of what is the acreage, and do we have some data? What sort of crop can we see this time?
Is there a study? Earlier, so there's a 6% increase in the area which is already reported as of now. The overall rains are very good in all the cotton areas, and it looks like the early estimate of industry is it could go to about 36 million bales or so in this year.
Okay. Thank you. I appreciate it.
Thank you. We take the next question from the line of Mr. Aman from Augmenta Research Private Limited. Please go ahead, sir.
Hi, sir. Thanks for the opportunity. Sir, actually, I just wanted to assess the situation as in, like, for example, during the same time last period, how would can you give some sense of the order book, like how much the order book would have reduced, or how have been the inquiries YOY? Because as you said that currently the Indian prices are high because of that the Indian spinners are at a disadvantage rather than the world spinners. So some sense on this on a YOY comparison.
No. I think please try to understand. I think this is what we are saying, since the prices of cotton were coming down or prices for commodities were coming down, everyone stopped buying. All brands stopped buying. So it's not only cost factor, is a second factor. So one is the overall brand consumption or the brand buying was less. So the overall demand was also less because of the factor. People outside were looking at more stable. So the overall demand outside was less because people were getting concerned on the inflation and on the gas price. India is a third factor where we were losing because our cotton. It's not that we don't have the order. Nobody in the system has got any order. Chinese or China. The only thing is whatever they are selling, they are not taking a loss, and if we are selling, we are taking a loss. Otherwise, overall demand, in any case, entire world.
I'm sorry to interrupt, sir. This is the moderator. I'm sorry to interrupt. Sir, your voice is breaking up. Mr. Aman, I would request you to please mute your line, sir, while you're not talking because there's some background disturbance from your line. Yes. Sir, you may go ahead.
Yeah, so another factor was last year there was a big supply chain issue for all the products. Brands were ordering much higher than what they needed because the demand overall was good and they were looking at the shipping not reaching on time. So they were extra booking all the products including the textile. As the situation of shipping supply chain started improving, whatever excess inventories brands had bought, they wanted to readjust also in this period. So let's say someone bought 1 month extra inventory in 2021, which has to be readjusted in this year. So as the supply chain was improving, prices were coming down. So the brands started readjusting to their order position also, which is also one of the reasons why the overall demand is subdued or less in this period.
Okay, sir. And sir, just can you just again, like, can you just again highlight the difference between, let's say, a US cotton price and the Indian price? What is this currently, and what is the general average? What is the general difference?
Okay. So normally the Indian prices will be about 5 to 7 cents higher than the New York future prices. So if, let's say, the New York future price is at 80 cents, Indian cotton should be in the range of about 85, maximum 90 cents. In this period, as on today, the New York future is at 90 cents and our cotton is at 137, 138 US cents. So instead of a 8 to 10 cents markup, we are higher by about 45 cents as of now.
Okay, sir. That was useful. Thank you.
Thank you, Mr. Aman. We take the next question from the line of Pulkit Singhal from Dalmus Capital Management. Please go ahead, sir.
Thank you for the opportunity. So the first question is, I'm just comparing your commentary, what it was in the fourth quarter call. Would you say you're now more optimistic on the prospects versus what it was 2-3 months earlier and see it more like a very short-term blip with recovery happening sooner?
I was never very pessimistic on the long term, neither on my fourth quarter call, or even before, or even today also. My concern was only that the cotton is short in the country and we will have to pay that cost till the time the new crops comes in. Same is the situation, so I don't think any fundamental changes happened in these 3 months. Yes, of course, the demand is less, but that's true for everyone. It's not only for Indian spinners. So I think as our raw material price will get readjusted to the world markets, after that I'm quite optimistic on the overall industry scenario.
So the biggest change has been that cotton prices started coming down. I mean, that has been a majorly inflationary trend when we spoke last time. So I would have thought that now with the prices coming down, which was the entire essence of the commentary earlier, this thing should change more for the positive was my expectation.
Yeah, so the two factors in between on this, one, as the prices started coming down, so everyone is looking at what should be the lowest prices where the normal price should start happening. Since it's been coming down very fast, everyone is on a wait and watch situation. That's one. Number two, unfortunately, the Indian prices have not come down to the extent what the international prices have come down. So in the month of May or June, when we were doing the fourth quarter call, the prices were almost 145, 150 US cents, which has now come down to 90 US cents. Whereas the Indian cotton from 105,000 rupees is still 82,000 rupees. So the prices, of course, has come down, but in India, the drop has not come, in line with the international drop. So that's where my concern for the Indian spinner as of now. The overall ones, our cotton is also comparable to the international markets. I don't think there's really any big challenge.
Understood. So last time we also talked about the spreads being at 90 cents at that point. How is it that even now the spreads are the same? I mean, there's no improvement at all from the 90 cents?
So the spread as of now is for the Indian spinner is surely much less than 90 cents. It will be in the range. So we are talking the spread means the clean cost of cotton versus the yarn prices won't be more than 50-55 cents as of now. And whereas when it comes to the all three other countries, which are the biggest spinners, it will be in the range of about 90 cents or so.
Right. Right. And also, if I ask from a slightly longer term thought process, I mean, obviously the Indian government is taking a lot of initiatives, whether it be through PLI schemes or this integrated textile parks. They're trying to, make some real efforts on creating this as a major hub for manufacturing. And we are also on a 8,000 crore of net worth with almost, zero net debt. So any rethink or thought process on trying to go for any of these schemes or the integrated textile parks kind of finally use our balance sheet, which allows us to do 3,000 to 4,000 crores of capex? Any thoughts?
We have yet to take a final view whether we really want to grow big on the governmenting side or not. But yes, once the new schemes come in, we'll definitely evaluate that. The earlier PLI scheme was not making sense to us because one, that's not our product line as of now. Two, the scheme also envisaged that it has to be a separate company for a turnover of 300 crore. And our feeling is for a 300 crores or some investment, creating those kind of infrastructure and then separating a company, it's a much bigger issue for us. Anyone who is a smaller or who intends to put in a new capacity, it's a beautiful scheme. But any large player which is already on the company is almost 9,000 crore rupees. For a 300 crore, 100 crore company to create a separate company and then all the utilities and those kind of things. So for Vardhman, it was not making sense at all to us, both in terms of this legal requirement and also that was not our product range at that stage. So we have not shown any interest on the PLI scheme. But once the Mitra comes in or those kind of things come in, we'll evaluate it for sure.
Even the integrated textile park, you will give a lot more serious thought process for application.
Hopefully yes. But the challenge is now we understand the government also wants to put into the areas where the more unemployment is there. So we'll have to understand and look at in terms of the overall ecosystem in those states, how does that work?
And when could we, sir, get some clarity on your thought process here? Like how far away is that? 6 months, a year, how much time?
Once they announce finally all their schemes and all the infrastructure will take. But as of now, for the next 6 months, 9 months, I don't think there's going to be any major decision from our side in terms of investing into those schemes.
Understood. Got it. Thank you. And all the best.
Thank you. We take the last question from the line of Mr. Nikhil Agarwal from VT Capital. Please go ahead, sir.
Yeah. Good evening, sir, and thank you for the opportunity. So, could you give any revenue guidance for FY23, FY24?
Revenue?
Yes, sir.
So I've already mentioned our capacity utilization is 8-10% lower in spinning and maybe about 10-15% in fabric. So to that extent, I think it's easy for you to calculate that.
Okay, sir. Yes. So just a clarification, on the spindle, you had a capacity expansion of about 1 lakh spindles coming up in August. So is that also on hold or
not on hold, but fortunately, because of the non-availability of chips and all those spindles, there's lots of machinery which is still not available. So one plant we have already started partially, and I hope that will get completed by 30th September rather than August. The other plant also we are trying to look at maybe September or October, they'll also get installed.
Okay, so the plant which will be starting, what is the capacity on that plant?
So I hope by October, November, the entire 100,000 spindles would be implemented.
Okay, great, sir. And so this captive, what is the captive consumption of the base fabric? Is it like completely you use it for manufacturing the process, or do you sell? Are there any external sales as well?
The grey fabric we sell. So normally there is always you require to have some extra capacity in grey to give a proper service to the customer. And we have about 20-25% extra grey capacity to give the right service for the processed fabric. So, but wherever, at the same time that capacity we normally sell in the markets. So whatever is the surplus capacity available. So our average gray sales in the market will be in the range of about 25-30 lakh meters a month. That's
okay, sir. Okay, sir. And so what was your, like, for FY22, what was your realizations on the yarn and fabric side?
Realization means?
The total volume sold by the total sales from each segment divided by the total volume sold.
That data, I think you can refer with, already a part of our disclosure to the stock exchange. I'm sure for 31st March, I'm not handily available this data with me. You could look at, or you could speak to our team separately. They can provide you whatever is the information.
Okay, sure. And so just one last question. So at what spread, you said that currently the spreads in India are about 50 to 55%, 50 to 55 cents. So at what spread are you positive, margin positive?
So close to about 80 cents, I think we start becoming positive.
Okay, great. Thank you, sir. That's it from me.
70 to 80 cents, we start becoming positive.
Okay, sir. Great. Thank you so much.
Thank you. That was the last question for today. I now hand the conference over to the management for closing remarks. Thank you, and over to you, sir.
Hello?
Yes, sir.
So our final comment?
Yes, sir.
All right. Thank you. So I think I've been explaining to all the investors, and to quite an extent we are still consistent on the thought process. The medium term still looks very, very good, and we were cautious. We were looking at the Indian prices of raw material much higher than the international prices, which was giving us a concern when we did the fourth quarter call. And I think slowly that's becoming true, and this period we have seen it, and another 3 to 4 months is going to be a more painful area in my view. So at the same time, we are looking at, though we have stopped 8 or 10% spindles in last 1 month or so, but we have also looked at wherever possible how to shift capacity on the alternate products, which might not be giving us a margins, but at the same time, at least we should be in a position to cover our fixed costs. So very proactively, we have been working on those ideas. And I'm sure as internally, we are very much concerned about the situation, and we are looking at whatever best possible in this period to pass through this time, so that we can retain the customers, we can sustain them. We keep on working on the efficiencies, both on the yarn side as well as fabric side. Our teams are working day in, day out. And I'm sure once the raw material abnormality is over, the margins or the overall scenario will be better. And also, since lots of spinning capacity is stopped as of now, there's already a vacuum which is getting generated into the system. Hopefully, if things goes well, there could be some possibility that the good demand could come in, but we have to wait and watch. I can't really predict in a precise way as of now. So I'm sure we'll pass through this difficult time also successfully for the next couple of months. And once our prices, raw material prices are internationally competitive, I think we're looking at a much better future. They're still very, very positive on the overall industry scenario. So thank you very much for attending this call. And from the management side, I can assure you whatever is best possible to do, we are all day in, day out working on the same. Thank you very much once again.
Thank you. On behalf of Batliwala and Karani Security, that concludes this conference call. Thank you for joining. You may now disconnect.